Good afternoon, everybody. It's August 20th. I am back from a little vacation. I don't know what it is about vacations, but maybe if I put it out here, it'll stop doing this. But for some reason, every time I mention going on vacation and go on one, the market goes through a period of a drawdown. Then the moment that I say that I'm coming back today, the market started ripping up higher. It's beyond annoying. And yeah, in today's stock market brief show, we are going to be talking about just a snapshot of the overall market. And I want to go into also one of my older indicators that I've shared in prior videos I'll talk about did flip to red for the Nasdaq 100. We'll talk about what it looks like for the S&P 500 as well. On the last video, we showed a bunch of charts. So I want to give a recap / update on what those charts look like and add in a little bit more elements, such as the book map and some hidden orders that are going on. We're going to get into market conditions as per usual and expected moves. So let's go ahead and get right into that. All right, ladies and gentlemen, welcome back to the show. So first and foremost, let's take a look at the 11 sectors that make up the S&P 500 today. What are we looking at here? We have energy leading, consumer staples leading, and healthcare leading the way. So it does seemingly feel like a more of a risk-off type day. And you could see that over here. The S&P 500 did finish down. The Nasdaq finished down there, and the Nasdaq 100 as well. But they did recover significantly off their lows, but you can see that we had a lot of green on our screen if you look at the heat map of the S&P 500, but it's the larger market cap names that really can put weight on the overall market. And we got to continue to watch this because it is interesting that we did get that sell signal come up on the indicator that I will go over here momentarily. But if you take a look at Nvidia, you are seeing some rather large intraday swings, a big move down under 170, which basically took us back a full month of price action, but it did recover well off the lows, and we still have earnings right around that corner. Microsoft has been fading from its high over here on earnings, and we're basically, that was the high point, and now we're still trading around the low point. I would still think that it tops or somewhat of a process. Is this an exhaustion gap? Perhaps, and that could be the top for quite some time. But typically, it's not that easy, right? You typically see bounces back at some point, which make for good risk to reward trades. So we'll continue to monitor and see if those type of trades do develop. Meta also well off of its high over here, a few days down, makes a big impact on these overall markets. But today, put in a nice reversal on that candle, still well off of closing that gap from earnings there. If you take a look at Palantir I'm showing because a lot of the leaders have started to see some big volatility, and one of those leaders being Palantir from 190 down to around 140. Yesterday, I posted a video, chart on Twitter, on X, sorry, that typically when you get these type of moves, there was a move that what occurred was it was over 9% on down on the day, and it was more than 8 or 9% from its 5-period EMA. And that's only happened 12 times in the history of Palantir being listed. And typically what happens after that point is you get some kind of stall out. And today, well, we didn't stall out. I'd say if you're just looking at a line chart at the closing price, yeah, that's more of a stall out. But we did slip off almost another 9% before recovering from that low. So big volatility in these names, which is good for the traders that like to trade more shorter term. For swing trading, what's happening probably with a lot of people in these names is this volatility expanding, and it's probably stopping a lot of players out. So from a swing trading perspective, you do want to see this volatility start to contract and new setups emerge. Now, going into the remainder of the week, we do have the Jackson Hole Symposium starting Thursday, and then we have Fed Chair Powell continuing there on the Jackson Hole Symposium with the Fed Chair Powell speech. Now, we'll see if he comes in dovish or hawkish, right? If he comes in dovish, right? Maybe he's telling us that he's going to be cutting rates here. We'll see, because there's also some interesting data about PPI and how inflation could reaccelerate potentially. And it's kind of a coin toss here, so you got to really watch just the flow of the market. But as it stands right now, what's the flow of the market telling us? Well, if you take a look at Fed Funds Watch Tool, you have about an 81% probability of a 25 basis point cut starting in September. And then we'll look a little bit further out, October and December. You can see that we're not really pricing in those 3 cuts anymore. It's going back to around 50 basis points, 2 cuts. So we'll see if that changes even more after the Jerome Powell speech. Now, you can see also, if you look at the money vol, clearly the market's anticipating some volatility to turn up. as this implied volatility as rising going into this event. As far as the remainder of the week coming into earnings, we do have tomorrow before the open, we have Walmart reporting earnings. After the close, we got Zoom, a couple other names there, but nothing really market impactful going on. Now, this right here is the Qs, and I'm posting just a study that I created a while ago using AI, and it's basically looking at multiple time frames. It's more of a fractal look at the market itself on multiple time frames, and it's also looking at rate of change, momentum, and the last time we turned red was down here. It went up higher, and then it went down, and then it turned green over here. And I'm just pointing out, just for the Qs as it stands right now, it did turn red a couple of days ago, and we saw some continued sell side. I don't know if this is going to turn into much more, but I do want to remind people the last time I talked about this was May 1st when we started getting a bullish signal on the S&P 500, and you can see it turned green over here. And I just am pointing this out because during these euphoric times and or moments of scare, a lot of people, I just went back through the comments and I pulled them, and I'm like, a lot of the people, right? And I don't want this to be you because, anything could still happen. But, look at some of these comments, right? Yeah, you get it. You get sells and buys too late. It's underperforming the S&P 500. Well, if you actually believe that, I mean, what happened? It went straight up, right? And then, overall massive bearish phase, global reset, like a bunch of narratives. Wow, a bottom is red, so green, then it's a top. Well, guess what? It wasn't a top. It kept on going up a lot higher. And if you thought this was the top and you missed this, well, you're probably chasing, and you got to just be aware that, hey, this is turning red on the Q, so this could tell us that we're in for some more of a consolidation. It might not be anything, honestly, because we've seen it just kind of go through a slippage phase and turn back up and go back to green. That would be great, just a consolidation. But I do want to say SPY is still green here, so that's more of a positive sign for me, meaning that we're seeing some rotations overall. So I do like to see that. I want to go ahead and get some recap and some updates on the charts that I shared in a prior video. So this was the S&P 500 on the last time we talked about it, how we had the bearish divergence forming, and how we're still in a bullish channel, but we could potentially come down to the bottom. And you can see today we came down near that lower end of the channel, and we started to bounce. So, it has resolved itself a little bit lower, but we're still holding some key levels. And we talked about this range on the 65-minute time frame, how there's a strong possibility that if it was going to follow crypto, which, this is the GBTC, which we use, perhaps crypto is giving us a leading indication that this is going to pull back in. And if I give you the update on this chart, well, what happened? Well, we pulled back into that 6,400 and 6,400, right? When we got under that key level, there's a fast move. Because it's kind of a low liquid environment over here, boom, and then we came back up. So when I'm looking at this now, you really want to get back above that 6,400, and that can open the door for further movement to the upside. But right now, it's kind of just within this overall range. This was Bitcoin at the time, how it was in its choppy range, and what it did do, it pulled lower into the lower range and started to bounce a little bit from that point. We also discussed the SPY up here and the Qs down here on the 15-minute time frame, and we noticed that the Qs were already below its 5-day moving average, and we said you need this to go higher in order for the SPY to recover. But if it remained down here, you can see the SPY start to break from its 5-day moving average. And if we update you on that chart, well, look what happened. We broke from the 5-day moving average, and the Qs really did lead the way lower. Now, we still have declining 5-day moving averages across the board. So instead of you trying to prove to the market that you're so smart and the market's going to recover, just be aware that the market hasn't shown us its real strength yet and getting back above this synthetic 5-day moving average. Now, I do want to call out something kind of interesting here from a hidden perspective, right? If you take your blindfold off and you look at the order book, I'm using ES, right, the S&P 500 futures, and there is this interesting level down here at 6,335, okay, just about 6,335 on ES, and there's it's not a huge level, and it could get removed at any time, but we're talking over 400 contracts on a huge product, so it's worth noting and being aware of these levels. Now, the longer that they remain here, they can act as potential magnets, right? Because if we don't have buyers supporting the market or continuing to drive the market higher, what's going to happen is the market's going to start to look for buyers, right? And if their sellers are overtaking the buyers, right, it's just an auction, they're going to start to look for where liquidity is. And there is liquidity down here at 6,335, okay, over 400 contracts. So I would say pay very close attention to that. We got to keep an eye on it because they can pull the orders and move them at any second, but that is a rather large size. So if we look on the chart to where that puts us, that's pretty much right in the center of this range that we're kind of in. We have the lower bound of the range here and the upper bounds over here. So that would just drive us into around that kind of, value area of the S&P 500 future. So that would be the idea that I'm kind of paying close attention to and want to see how price may trade around there if price were to slip further, which would bring us, right, like I said, round to the center of the box where we've seen prior resistance turn into support there as well. If we take a look at the NDX, we had the bearish divergence. We were saying that, hey, it's still in a bull channel. Look for a potential for it to come here and then see what price may do. Price did slip under it, but it closed above it. So a little peek out. So we haven't broke through it, but hey, if we come break through it, that does open the door for some further more slippage. And just pay attention to the volume we also called out that we're seeing on the down days, more volume on the days that they're down on the Nasdaq 100 or the Qs. We showed some megaphone patterns on the prior episode as well, so I want to give you an update here. This is what the IWM looked like. We were looking for some more consolidation as it hit its upper monthly implied move, and you can see what did we do? Well, we kind of drizzled a little bit lower, just consolidating, big couple of days right there. So not necessarily bearish by any means. It's just consolidating. Dow Jones looked like this as it was tagging the upper range of this megaphone pattern. What did it do? It's just going sideways over here, actually showing some relative strength compared to most. So it's overall just a bullish consolidation there for the Dow Jones. Sorry. We talked about a couple of sectors, right, that we might see some strength. So as these markets slipped off, what did consumer staples do? Well, this is what consumer staples looked like at the time. And you can see we broke out to the upside. Now, this is going to be big earnings coming tomorrow. So we don't know what Walmart's going to look like. If it's positive, probably will help out consumer staples quite a bit. But overall, we did break this trend and we're cresting into new highs on the year for consumer staples. So that looked pretty positive. This was utilities, and the updated chart of utilities is a little bit higher as well. So if you did look into those sectors or put some, money to work in those sectors, it should have helped hedge against some of the larger tech stocks going through this period of consolidation or pullback that we just recently did. So that's the update of those specific charts that we talked about and what they're kind of looking like now. I will say utilities still look pretty good. We're just kind of consolidating here, or stone's throw away from new highs. So that's all looking good. But market conditions have changed subtly, right? So if we take a look at the net gamma chart, at the start of the day, right, there's this big kind of 64.50 to 63.50. It just slipped to no man's land right here. And if you looked at what happened intraday, well, we slipped through 6,400 and boom, it slipped to 63.50 rather fast. So 64.50 down to 63.50, and we were starting our day just at 6,400. But you can see if you look at 64.50 over here, what happened? Well, we kind of slipped through this and it just went, on a very fast move these last couple of days down to where there was more exposure or where more market participants were hiding out at that 63.50. Okay, so if we go ahead and go into back month, first front month volatility, we talked about that this was getting frothy as well, and you could typically see some spikes in volatility and or the market consolidate and pull back. Well, we're still rather frothy there. So this tells me that the market still has a potential that we can still see some more volatility pick up in the very near future until this thing backs off. If we do get a vol shock or anything that happens and the market pulls back further, I do like to see this pull underneath this 1.0 level because that has marked good bottoms or periods of consolidation as well. But right now, it's still rather frothy. And this is also taking place as we're below a declining 5-day moving average in the SPY, the Qs, the IWM, semiconductors, XBI is kind of going flat to down, and then DIA is showing the relative strength, how it is yellow as it stands. So the market conditions currently, we are above the gamma flip line, albeit we not far away from slipping under it, which we did slightly today. Okay, it was actually a little bit lower and I just updated it. So we'll see what this looks like in the morning. I usually post it in the Discord every morning. But right now, this is where if we slip under it, dealers, right, especially if we break through the lower weekly implied move, you can have significant selling into selling and you can see volatility pick back up. But as it stands right now, we're holding in the weekly implied move and we're slightly above the gamma flip line, which is a more positive sign going into this next trade session. But as far as this goes, you are in an area where, hey, the patient trader can say, I'm waiting for the market to prove itself. And the impatient trader, one that wants to look for opportunities to buy the dip, the times to typically do that are, well, when things get very extended from the 5-day moving average and or the expected moves. And I could show you that here in the expected move section. For example, today, right? Today at 6 hours, I guess I don't have the exact time here, but when the chart looked like this is the Qs, and it was very extended from its lower weekly implied move. And these are the type of shorter term trades that I don't mind fading, meaning if it's selling off, I like to fade it to the upside to come back up into around the lower implied move. So that is a trade that I took today, right? From down here back up to and around this area for a shorter term little pop. I'll give you the update on those expected moves. This is what the weekly implied move looked like on the last video, and this is what it looks like now. We came into the lower weekly expected move. So going into tomorrow, right, this would be where the daily implied move is and the lower weekly. So it is very common to doodle around the weekly implied move. So I wouldn't be shocked if we come back down here. But if the market wants to pick itself back up and head to the upper daily implied range, just be aware that we're still below a declining 5-day moving average here as well. It would be positive to get back above the week to day VWAP, but you want to see it hold and then this start to turn back around. We only have a couple of days left in this trading week, but that would be a more positive sign to see something like this take place and then obviously head higher. But as it stands right now, right, the market has some work to obviously do. Now, as far as the Qs go, we are still outside of their weekly implied move, underneath the declining 5-day, underneath the week-to-day VWAP. So the market has to prove itself here. You can say that this is potentially bear flagging, whatever. If we start breaking down lower, the lower daily implied move is at about 561. I don't have the Asherbot levels on here because they just haven't updated yet. I did some rough backhand math to give you the Asher levels here, which creates more of a zone to watch for, which I prefer. And then the upper level over here for the Qs is at 570.82 going into tomorrow's trading session. Now, if you want these Asherbot levels, I want to remind everybody of PSA, the trade ideas, which is just in the pinned comment or the link in the description. It's $9 a month right now. Price is going up higher next month. So anybody that signs in now and does the monthly or do the yearly, as long as your credit card doesn't decline and you cancel, you are grandfathered into this price, and then you get access to all of these benefits that I share on the Discord. It's not an alert service, but I do give some swing trade setup ideas. I share my watch list once a week and my tight list, which are stocks from the watch list that are contracting. I give expected moves daily, weekly, monthly, quarterly, and now I didn't add this in, but I do have my Asherbot, and the Asherbot allows you to pull weekly implied moves, daily implied moves. It allows you to pull a premium, IVOL premium and discounts, which is pretty cool for individual stock equities. And then I'm also including now, running an update on that for monthly implied moves and the ability to look at prior expected moves on different days or different weeks or different months. But that's not all. I also include the entire Trade Ticks suite in there. So if you want the query channel, right, you can go into the query channel and you can type in all these different types of commands to get gamma levels, flow, like all kinds of cool stuff, whale watch, top flow, and then it gives you some data there as well. Then I give a zones fractal doc. I give all kinds of stuff in there. There's a lot of resources. You don't need to use it all, but there's a lot of data in there. And then you have access to the community as well, all for that $9 a month. That's all I got for you on today's episode. Hope it helps out, gives you some insight into these markets. I'll see you back here on the next.